Greetings, members one and all of the Salivation Nation. Is it time to get serious about silver? Let's explore this article from FX Street and take a look at some of the analysis and some of the numbers and find out. Yes, this comes to us here from FX Street and the World Silver Survey 2019 review. It's the Institute's annual World Silver Survey, said that global silver demand has hit a 3-year high in 2018, surpassing more than 1 billion ounces, an increase of 4% from 2017, from the prior year. And with the prices rising now, could there be more demand coming for 2020? We'll find out. The top 10 silver producing countries are Peru, Bolivia, Australia, Argentina, Mexico, Chile, Poland, China, Russia, and Guatemala. Notice the US isn't on that list. And get this, in every one of these countries, silver production has been falling for the last 4 consecutive years. So in this chart here, from SRS Rocca Report, top silver producing countries forecasted change in mine supply 2017 versus 2018, with Australia only in the positive here at 8%. Chile, Russia, Mexico, Poland, Peru, Canada, and the USA especially are way down. Look at that, especially Canada and the United States here. And it's interesting here that Mexico is at a negative 2.5%. It used to be one of the very top, especially for the primary silver mining companies in Mexico. Supply from scrap sources is at a 20-year low. That could increase as prices go up, though. Silver fabrication manufacturing demand is just below record levels. And that's interesting. So silver fabrication based off the economy and everything has been going up, and demand is increasing there. Silver demand for solar panels has risen for 6 consecutive years. Really, there's no surprise there. And it's expected to set a new record in 2019. In comparison to the roughly 6 billion ounces of gold mined over history, roughly 54 billion ounces of silver are estimated to have been mined over time. In direct contrast to gold, however, roughly half of the mined silver, 27.2 billion ounces, is estimated to have been consumed, destroyed, or discarded. And that's a myth, though, actually, because though consumption or used, I think, is really the correct word to display there, because you can't really destroy silver. You can discard it to a point where it is not recycled, but doesn't mean it's not recyclable, or it can't be reused. Subtracting from the remaining mined total, roughly 24 billion ounces of silver estimated to exist in the form of jewelry, silverware, statues, and decorative objects, this leaves only 2.8 billion ounces in the existing investable above-ground stock of silver, valued at only $46.2 billion. That is quite interesting, and that's a very small little piece of the pie, considering the value of everything else out there. But keep in mind, a lot of people think silver is undervalued. Therefore, the investable stock of silver measures less than 2% of the investable stock of gold. It is easy to appreciate why silver performance during the precious metals advances can prove comparatively explosive. From Maria Smirnova, which is from Sprott Asset Management. And so here you can see the silver delivery volume here. Quantitative total. Consumption by China and India shows no sign of abating. Delivery volume, look at that. Over 30,000 tons there here in 2019. The movement of gold from west to east, with over 60% transitioning through Swiss refineries as it's turned into the most in-demand form, which is 4 nines fine, is like a virtual golden river. While demand is picking up in some European countries, North America appears to be asleep, with many people actually selling their gold and silver into the most recent upside breakout. How much sense does this make? Yeah, and that's just it. I've seen both sides of that. I've seen one situation where, as I mentioned in a prior video very recently, how my LCS, all of their gold bullion or bullion-like products, including some common pre-33 pieces, have been wiped out. They've been sold at all. Another case where some silver has been sold because of the climb in prices. 3 100-ounce bars to start, with more to come. 8 years of declining prices have caused many investors to develop a case of continuation bias. That is an interesting term, and that is I think what silver has been suffering as of late. We've seen some, and it's even been noted in the community here, that people have lost their faith in silver and what it has done, because there's been times, a great number of times, where it's performed less than the amount of inflation. And I believe now it's climbing up to that level and doing what it's supposed to do in times of economic uncertainty. They understandably assume that this downward trend, which is at its low point, had shaved off a full 60% from silver's 2011 price points highs, will continue. And keep in mind, you have to understand that 1980 and 2007 were anomalies, or 2011. Both those times were anomalies. And should not be really considered in the overall performance of the metals. We emphatically believe they are incorrect. With the evolving situation, David Morgan at the Morgan Report says the following: silver will shine, then soar, and finally skyrocket, while stupefying the masses. Remember, only 0.2% of the world's wealth is actually in silver. If that were to become just a measly 1%, it would require a 50-fold increase. So when all the other assets are failing miserably, do you really think that only 1% of the world's population would want to own the timeless monetary metal? And some of the charts talk about, and the thing is, keep in mind, David Morgan is a silver bug, and I think he's making some assumptions which may not necessarily hold weight. If it's 0.2% of the world's wealth, and it increases up to 1% or what have you, I don't know that people would necessarily go back to it, and doesn't necessarily mean the price would go up that quickly. Making one correlation from another, I think, is unwise to do, especially considering charts. The above gold and silver charts have formed the most unusual technical patterns the author has ever run across. The gold chart shows an upwards sloping flag pattern, which is usually bearish. Yet prices broke to the upside, then began forming another bull flag. Silver is even more interesting. Over the last few weeks, prices have formed 3 stair-stepping bull flags. Whether this is a precursor to higher prices right now, or we see a correction that contradicts them, it tells the author that it is no ordinary rally, not just a few months of upside action and then giving it all back like in 2016. Something much more significant is going on. But, you can look at these technical trends and make inferences from them, and that's fine. There's much smarter people than me that can make inferences from that, and they could prove to be correct. However, I think you can throw all the technical analysis out the window, because there's so many things different now than there were back then that could also play the role that could smack silver right back down to where it was. I don't discount that. So that's something that has got to be considered for sure. The author believes that what we are seeing in gold, silver, and in the mining shares is the beginning of what may evolve into the greatest metals bull market in which you and the author has ever participated. Maybe so, maybe not. It should mean that we should keep a serious eye on silver. It's time to get serious about silver. I believe that wholeheartedly, that it could happen. But it may not happen either, and I think there's probably a greater chance that silver prices will continue to climb along with gold at its present ratio differential and that spread, or tighten up a little bit. In the early 2000s, the author stated his belief that before the public mania phase had been completed a number of years hence, we would see silver prices at between $175 to $250 the ounce. Yeah, I don't know. Not sure what that means, but seems hard to believe. However, we now have a gold metric figure to which this kind of prediction can be attached. A number of analysts have stated their belief that gold will reach as high as $40,000 or more an ounce. I've not seen that. So Jim Rickards made that prediction at $10,000 an ounce. He talks about here. He's more conservative, saying Jim Rickards' prediction of $10,000 per ounce, who I believe was the first one to state it. Then I suggest the gold to silver ratio might help define several price points under such a scenario. Just a few weeks ago, the gold-silver ratio was 94 to 1. As of this writing, it's still in the upper 80s. In 1980, the ratio got down to about 15 to 1, but I'm going to be much more conservative and suggest 3 ratio points, assuming 10,000 gold. This helps us assign silver price expectation when the two metals start topping out. This is really getting into fantasy land, I think, here, folks, because $10,000 gold, as Jim Rickards predicts, or $40,000 gold, as the author may predict here, is I think would mean that there's going to be catastrophic failure of the dollar. At 60 to 1, silver would trade about $165 per ounce. At 51, silver would trade at $200 per ounce. At 40 to 1, silver would trade at $250 per ounce. Below that, whip out your calculator and have some fun. I don't even think it's going to get 60 to 1 at this point. I think we may be lucky to see 71. Even though the normal may be between 55 and 60 to 1, I think we're a long ways off because of the trends that we've been seeing and silver being seen as that commodity aspect. If the metals get anywhere near these levels, I'll be implementing the plan David Morgan and I discuss in great detail in our book, Second Chance, How to Make and Keep Big Money in the Coming Gold and Silver Shockwave. A lot of books talk about how to make a lot of money from such a big move, but our text may be the one devoting serious thought and devising method according to not against human nature. And that's fine, but I always tell people, don't speculate with that which is not speculative. In other words, gold and silver were never meant to be, as the metals themselves are not to be speculative assets. You're setting yourself up for failure if you look at them in that way. I believe that silver and gold, the physical assets, you can play around in the paper markets all you want, in electronic markets, ETFs, SLV, GLD, or what have you, because you're not really touching the physical, and you understand the risks that are involved, and in many cases, you don't hold it, you don't own it. But my feeling is that the metals themselves, they don't pay dividends. They preserve your wealth. They're an insurance policy. So there it is. So that's kind of where this article is kind of moving towards. And if you want to take risky moves in those kind of markets with that, be prepared. It may not happen. And this is a very bullish article about silver. I want to kind of bring light to it. But I do agree with the overall headline here. It is time to get serious about silver. And getting serious about silver, I believe, as well as understanding that it has room to move up because of recent events, and also, with what's going on with the supply that could be coming in the years, and looks like there's less supply out there, or could be coming in the next several years. There's still a lot of silver out there. The price goes up, scrap will increase, and they'll recycle it when it becomes economically viable. Understanding that it could move up, but it could stay the same. Getting serious about silver also means understanding that it could go back down again, and it could be stagnant for a while. The movement up and down, understanding the metal, is paramount to being serious about silver. Post your thoughts below. I'd like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, share, comment, and if you haven't already done so, give a subscribe.